Mutual funds are those funds that are managed by companies. In this case, companies are also called as AMC, that is Asset Management Company, or also called as mutual fund houses. Now, these funds that is given by you to them is a pool of money. Suppose, for example, you give them 5,000 every month and you tell them to invest 5,000 in these securities. Now, each AMC has its own allocation, whether it is debt, whether it is equity, whether it is sector wise, whether it is market capital wise. So each AMC is separate and you need to decide which AMC you want to invest in. There are multiple factors that you need to consider, and the most important factor is the risk factor. Whether you are a low risk taker, whether you are a moderate risk taker, or whether you are a high risk taker. With risk comes returns, so low risk is low returns, but it is consistent. High risk means also high returns. Number 2 will be the rating. Mutual funds are also categorized on rating, whether it is 4 stars, 5 stars, 3 stars, 2 stars. You can decide on that. Another factor that needs to be considered is the expense ratio. On an average, the expense ratio is between 0.5 to 1%. So the more lower the expense ratio, the better is the mutual funds. Last but not the least, every mutual fund has to publish their average returns, whether it is 1 year average, 3 year average, 5 years average, or all time average. So you need to look at that and decide which AMC you want to invest in. If you're new, consider following Vision Shares. I'll see you next video.